Welcome everyone to another stock investment analysis on PayPal. Here today we have one of our student analysts and community leader, Aaditya. And this is meant to give you more insight into the level of analysis and technical skills applied by Wall Street professionals when it comes to valuing a stock and determining if it's too expensive, overvalued, undervalued, or fairly priced. So with that being said, Aaditya, how are you?
I'm good. I'm excited to be here. Talk about PayPal and its the way it's going to move, its future outlook. Just a quick introduction. My name is Aaditya Shah. I'm a junior at Emory University, double majoring in economics and finance. I'm a community leader at Romero Mentoring and an equity research analyst at Romero Research. So yeah, looking forward to the conversation.
All right, great. And thank you for the introduction. So the way we're going to do this presentation is give everyone a general overview of what's been happening with PayPal, the situation, what is Wall Street sentiment, what are some of the analysts thinking about the stock? Is it expensive? Is it fairly priced? And also take a look at their price target and also dive more into Aaditya's valuation and his own price target and his take on PayPal, the overall business. So let's dive here right into the presentation that you put together for us. And with the first slide, the situation overview. So help me and the viewers and the general audience basically understand what's the situation with PayPal, how have they performed year to date? And then from there, we can dive more into the information that you've annotated or laid out here for us.
Sure. So typically speaking, after looking at its revenue growth numbers for historically, it is safe to say that PayPal is a growth story. But in the last 2 years, they have also incurred a lot of restructuring expenses. So I would say that PayPal is a growth as well as a restructuring story. They've been showcasing mid-teen attractive growth, which makes them one of the pioneers and leaders in the digital payment industry. So the way their business model works is that they operate in a global two-sided network at scale that connects merchants and consumers across more than 200 markets. They charge a transaction fee for every transaction made by a merchant or a customer. Through its various payment platforms, PayPal has been able to not only cover B2B, B2C markets, but also C2C markets. So yeah, I mean, the environment has been really, really good for PayPal. Last month, it was down a bit due to sector rotation and sell-off in the US government bond market. But now that the earnings season are around the corner and a few catalysts, which I'm going to talk about later, I think the future looks really great. And right now, as of today, I think the stock is up 17% year to date. So yeah, it's looking pretty good.
Okay. Now, in terms of Wall Street analyst sentiments, I see here that you have Barclays, Morgan Stanley, and let's see, so you have two. Okay, so there's two price target for Morgan Stanley. Is this correct?
Yeah.
Okay. So,
That's JP Morgan.
That's JP Morgan.
Yeah.
Okay, Morgan. Yeah, you can see there's almost a similarity. You could get confused by it. Now, what's their sentiment? So this price target of 318 by Barclays, then 310 by JP Morgan, and 329 by Morgan Stanley. I mean, is this bullish? What's their overall sentiment?
So the street is really bullish on PayPal, typically because of three reasons. So the first thing is that 2020 was a great year for PayPal because not only because COVID acted as a catalyst and transformed the way business works in general all over the world, but also because PayPal was able to launch a lot of products and services which increased consumer experience and improved consumer experience. One such thing was in line with the whole cryptocurrency trend which has been going on. They launched Pay with Crypto, which allows consumers to buy, hold, and sell cryptocurrencies within the PayPal platform. Last week on April 20th, they launched crypto on Venmo. So if you're a Venmo user, through Venmo you will be able to buy, hold, and sell cryptocurrency, and also access other features within Venmo. The second reason is that going forward, now that things have become better, things have vaccines have been rolled out. The biggest competition which PayPal will now face is the physical point of sale. So it's
Okay.
going to compete with other people, with its other players in this industry at the physical point of sale. And it's got to convince consumers on how to change their payment methods. So for that, they launched a QR code strategy in May, um, and they partnered with 29 big large enterprises and other 600,000 retailers. So amongst the large enterprises were Nike, were Bloomingdale's, it was Foot Locker. So I mean, the overall cadence of products and services which PayPal has been launching and is expected to launch, I think it really is going to increase customer
Yeah.
experience and generate free cash flow again. So yeah,
Okay.
it's fairly priced.
And I see here as part of their operational performance, and that translates to higher net sales, up 21%. Total active accounts, 307. I mean, this is a big number,
Yes.
377 million, which includes 27 million active. This is an interesting number. So they have 377 million accounts, PayPal holders, but the ones that are actually using it, transactions, maybe small business to large businesses, is 27 million.
Mhm.
That's more of the exact number right here. Okay, but all of that still translates to double-digit revenue growth,
Yeah, the
and then
volume has been really good.
and then the payment pay per account increase. Okay, cash. So this is pretty much really good or strong performance for 2020.
Hmm.
Uh, what's your take on their growth, given the strategic partnerships that you just mentioned? Are they going to perform better in 2021 versus 2020?
I think they're going to perform better, if not in line with their performance in 2020, because they are planning on launching other products as well in 2021. So one such product is, according to the latest Investor Day presentation, they are trying to launch a super app called DOM, which is going to integrate all the services which PayPal has to offer into one single app. So that is really, really going to increase consumer engagement and consumer experience. Secondly, the total payment volume and the QR code strategy, which I mentioned earlier, I think this is really going to drive the growth in 2021. So I think yeah, the numbers look pretty good, and I think I wouldn't be shocked if PayPal exceeds expectations this
Okay.
coming earnings call. Yeah.
Okay. Okay. Now, did you get any insight, or did the company made any press releases giving guidance for the upcoming quarter season? Obviously, last year with COVID going, there was a stronger shift online, a lot more transactions, a lot more e-commerce activity because of the lockdown from the pandemic. Have they hinted or giving any guidance for their upcoming quarters on better than expected results? So did they see an uptick in volume in business transactions coming from online e-commerce?
As of now, I don't think they've given any information. They provided any information about that. But in response to, in relation with the most recent Investor Day presentation, which they just had, I think they are more focusing on competing at the physical point of sale. They are going to be working with improving pay with crypto, their experience, consumer experience in Venmo, and they're also trying to expand their services across
Mhm,
different
mhm.
countries. So right now, to answer your question completely, I don't think they've given out any press releases
Okay,
regarding that, but we are still optimistic.
okay, okay. And I see here, so you have a buy rating with a 330, with a 313 price target.
Hmm.
And this is coming on the backs of your DCF comms valuation.
Yep.
Okay. And then same revenue growth, PayPal's value at a higher multiple. Okay. Okay. What about competition? I know this is a very competitive space, and PayPal's not the only one, right? You have
Yep.
PayPal, you have Square,
Hmm.
Visa, MasterCard. How competitive is the space? And is it lowering expectations on revenue growth when you're comparing it to PayPal?
So, in terms of competition, PayPal is kind of leading them and beating them by a mile. Although, as you mentioned, this is a very, very competitive space. The industry is, expected to grow by 29% compound annual growth rate by 2027. Um, so, in terms of there is a lot of pressure because a lot of companies are trying to improve their business model, give more importance to the front line, the consumers, and just and this whole industry is very, very new because there are very because simply because we just saw how important digital payment market is, especially
Yeah.
due to COVID-19. So I think if you move to the company comparable analysis section, you'll see that the margins, PayPal's margins are really, really good in comparison to in comparison to the new companies which have just come up, like Square, Fix, and all of those, Fiserv. So their margins are looking really, really good in comparison to
Okay.
those companies, and their multiples are also better than the industry average. So I think they are in a good shape, but of course, like there's a long way and a long road to be traversed ahead.
Okay. Okay. Now let's continue here with some of the slides that you put together. Barclays, JP Morgan, Morgan Stanley. What's the main takeaway from Barclays, JP Morgan, and Morgan Stanley? What stood out to you as the main investment catalyst or thesis to give them a price target of 318, for example, for Barclays here? I see they have a 318
Mhm.
price target. What stood out when you read this?
One of the things which stood out a lot for Barclays was that they mentioned a great opportunity for PayPal because in their Investor Day presentation, as the Equity Research mentioned, that the management said that there's 4 times as much opportunity in the offline transactions than there is in the online transactions, giving them the opportunity of $8 trillion in terms of addressable market to capture. And that is through the physical point of sale method, which I was talking about, the whole QR code strategy. So if they are able to tap into the market, that could be really, really huge and profitable for PayPal. In terms of JP Morgan, it talked about the transactions and recent acquisitions which PayPal made, like with Honey. Honey is basically a platform which provides
Mhm.
personalized shopping for consumers by giving them specific tools, personalized tools, and also it talks about the super app which I mentioned earlier called the Dome. JP Morgan and Morgan Stanley typically talk about almost the same things. So in terms of and also Morgan Stanley mentions crypto trading using Bitcoin as one of the things which I mentioned earlier. So yeah, the overall theme across all these three equity research reports and our is pretty much the same. And the future and the overall theme, if I had to summarize in one sentence, would be the future looks really, really good, but there's a lot of work that needs to be done,
Okay.
and execution is key.
Okay. Good. Good. Let's continue here. Let me take a closer look at their valuation. Okay. Okay. Now, the valuation that these analysts were performing, was it more on a multiple basis? Did you see any DCF? Was it based on revenue? I think I
Uh,
see here revenue and
yeah.
EPS.
Mhm.
No DCF.
No, there were more multiple based.
Multiple based.
Yeah.
Okay. And I can see it. Okay. All right. So I see here your investment thesis that you
Hmm.
summarized on this slide. Can you give us a better understanding of these 5 points as part of your investment thesis?
Sure. So first is acceleration of top line revenue growth. So this acceleration is going to come from the kind of products which they're going to launch in 2021, and also the total payment volume, which is expected to grow. And as they've also mentioned that in 2021 they're expecting to add 50 million more active accounts um, to their payment platform. So that is going to be leading the revenue numbers. Secondly, as I already mentioned, the business environment has changed. And the business environment, the way traditional businesses used to work, brick and mortar stores, and the line between digital, offline, and online business methods is getting blurred. And that's a great opportunity for companies like PayPal to enter. So that has acted as a positive catalyst for PayPal. Then increasing user exchange engagement and wide product breadth. It's the super app which is going to develop, introducing crypto, and things, and just launching more products is going to be the one which is going to be driving growth again. And but since it's a technologically based company with a lot of focus on digitization, safety is a really, really big issue. So they are going to be investing a lot of their free cash flow in making their network extremely secure for merchants and consumers. So that if if PayPal is competing with another company, and PayPal is safer, the market share is going to go to PayPal because security is something which
Yeah.
consumers really value. So yeah, I mean, coronavirus also helped PayPal again in driving growth.
Okay. And I see here future expectations. Your first point, we can definitely bring this up
Yeah.
here, so it's not two separate rows. But the mobile wallet industry is mature and it's expected to grow to 8.9 trillion by 2027. That's huge. That's a huge, huge number. And you also brought up a very important point that they're expected to bring on board another 50 million active merchant. Did they give any details on how they're planning to bring on an additional 50 million active accounts?
Yeah. I'm sorry. I think there was a problem with the network in the middle.
Are
Uh,
you able to hear me now?
yeah.
Okay. So my question relating to future expectations, you mentioned that they're going to bring on board 50 million new active merchant accounts. Did they give any insights on how they're planning to do that?
They did not give any insight on how they're planning to do that. But I guess just so they're incurring a lot of restructuring expenses, trying to restructure their business units, their operational design. So I think that has something to do with how they're going to build up. Then I think through acquisitions, they just bought Honey as a shopping platform. So strategic acquisitions, partnerships, restructuring their business a little bit. I think that's what's going to drive this additional active account, which is just going to come up.
Okay. Okay. Good. Let me go here through some of your slides to help me better understand their situation. So transactions, active, okay, their strength. So these are all of their
Payment
products.
platforms. Yeah.
Venmo, iSettle, GoPay, okay, Zoom, a PayPal service, okay, key metrics performance. Okay, all right. So this is interesting. And then the Honey acquisition. Do you during your due diligence, did you get to see how much did they pay for Honey?
Um, I I did see how much they paid, but as of now, I don't think I can recall it at the top of my head. But it was definitely something.
4 billion.
Yeah.
Wow, 4 billion. That was a $4 billion transaction.
hmm
Okay. Okay. Now this is where they have all of their products.
Yeah, they're across 200 markets,
Okay.
and they're gonna move internationally
Okay.
more.
And here we have the financial performance on an EBIT basis, diluted earnings per share, revenue. Okay, so definitely consistent growth. And you're right to point out that this is a growth story in the digital payment processing space.
hmm
Okay. And we'll definitely look at the chart. I want to see where they're currently trading at. Okay, now let's see your model and what it is that you're actually forecasting. Now, when I see your revenue, so this year they're expected to have 25.6 billion, followed by 30.9 billion, then 37. Okay, here's the revenue growth. Now, okay, so these numbers here that you're running, are they your own numbers or are they?
These
Okay,
are the street numbers.
okay, Wall Street. So you're running Wall Street consensus to your own model. Did you Did you have multiple cases? Did you ran other cases?
I did. I had a bear case and a bull case. So which and actually not a bear case. Like to call it a Romero mentoring case, a
Okay.
Romero research case.
Okay. And I see the margins. So wow, so margins have been picking up from
Yeah.
2018,
Hmm.
19%, 20.4, 20.9. This is a significant jump.
Yeah.
Is there an explanation behind this significant increase?
Yeah, so typically the reason why these margins have been increasing is mainly because of lower transaction losses, and due to also a good restructuring expenses, strategic technological development, and so yeah, things just the management is being doing a really good job in
Mm-hmm.
squeezing out profits and in maximizing their opportunity at all levels.
Yeah.
So yeah, so I think management deserves the due credit.
Okay. Okay. And I see here your cash flow statement, the free cash flow, which is down here, it's pretty good. It's pretty healthy. I mean, it's also increasing and accelerating,
Yeah.
giving the growth of the business as you would
And one
expect.
thing we learned during COVID was cash is king. So that's a definitely a positive thing.
Cash is king, absolutely. Yeah, during that period, it's when there is some sort of disruption to the economy, the financial system, companies that don't have positive free cash flow type businesses do suffer, and
Yeah.
um, they run the higher risk of going through liquidity issues themselves, and obviously then going out of business. So having a positive working capital, and of course that depends on the nature of the business,
Hmm.
but definitely maintaining cash on hand to run your operations for at least 12 months
Yeah.
is so important, especially for small business owners.
Hmm.
Very important to understand that. Okay. Now I see here your comps, and from a multiple standpoint, they are all right. So on an EBITDA basis, they're trading above the industry average, and also on a sales multiple basis. Okay. And then when I see your earnings per share growth, 23%, whereas the industry is growing much faster. And I see here, okay, so these growth rates, it's
Yeah.
being
This.
heavily impacted by
Yeah.
this one,
Hmm.
493%. So that's an outlier. So I'll
Yeah.
focus more on the median,
Hmm.
right? So the median 29%, then they're at 23%. Okay. Now on the margins, when we look at the margins, they're trading the margins is below the industry median. And obviously you talked about the restructuring and the improvement of their costs to increase their margins, probably to bring it more in line with the industry.
But also, I think one key thing is that if you compare their margins to companies like Visa, MasterCard, which have been there for ages,
Mm-hmm.
um, they are definitely a little shy. But if you compare it to margins of, say, Square, which are approximately of the same age as PayPal,
Yeah.
they are doing much better. If you compare to Fiserv, they're doing much better.
Okay.
If you compare to Intuit, they're not doing as good. But
Mm-hmm.
I mean, in comparison to newly found companies, I think PayPal is doing really, really well.
Okay. Okay. Good. And then I see here your DCF, your full portfolio analysis, the different price targets on your street case, 227, on your bear case, 265, and the bullish case, 319. So how did you came up with your price target?
So I did an average of EV over sales, EV over EBITDA, and DCF.
Mm-hmm.
And by running a few cases like bear case, bull case, and Wall Street case, I was able to understand.
Okay.
I was able to massage my numbers and come up with those relevant price targets depending on the kind of message which the
Okay.
company delivered, and the kind of outlook which the company gave us in their most recent presentation.
Okay. So let's take a look at the chart, and now for me, the chart needs to confirm this, right?
Yeah.
Because if PayPal, if it's a $8 trillion market by 2027, and PayPal continues to add more active accounts which you've mentioned that they want to bring on into their network 50 million additional accounts. And then all the other analysts on Wall Street, they're also bullish on the stock because e-commerce just keeps growing. Online shopping, small businesses opting into their network, it's still going to continue. So there is a entire momentum that is benefiting that, right?
Yes.
When you look at that entire industry space, fine. So they have the back tailwind behind all of that. Now, the chart to me needs to confirm this. So let's take a look at the charts from a technical analysis perspective. All right, so here's our platform. Let's go to charts. PYPL, right? PYPL.
Yep.
So here's PayPal. Okay. Let me add an indicator here. No, let's add a simple moving average line, which is an indicator for institutional traders or institutional money managers on when they can come in and add more shares if they're longer term bulls. So typically the 50-day average line moves that. So let's zoom out. Okay. We can definitely see the momentum still to the upside, and they regained the 50-day moving average line, right here. They regained it, and the momentum is still higher. Just the same way they regained the 50-day moving average line here when they traded above it. They also did it here. So with all of that momentum and all of the loose monetary policy, cheap money supply rolling around, I think this is setting up the stage, if they beat earnings, right? That's a major catalyst to perhaps come back and retest the all-time highs and continue moving higher and hit your price target. So the technical charts is setting up for that scenario, right? This would be perhaps scenario number one. Now, if earnings are weaker than expected and the market, it's not happy with those earnings, maybe you could probably see the stock coming right back to its previous support point, which is right around here, around the 220 mark, right? We can set around the 220 mark. So this will be scenario number two. And based on your analysis, you're more inclined to believe that case number one is more likely to happen.
And case number two, if does happen, my stop loss is at 228. So it's pretty much close to the support line. And by risking like 2% or 5% of my portfolio, I think this is a good bet to make. I mean, stock market by the end of it is a bet. It's a betting game. With you have some players who are just really have a good understanding of the knowledge and of the information which is out there. And by understanding the information, I think there is more chances of the stock to go upwards than downwards. So I'm willing to take that bet.
Now, let me look at this at a longer time frame. Let's look at on a weekly basis. Yeah. And I think for everyone that's watching, typically from a tactical standpoint, what are the best time to potentially, be in this stock? Let me remove the moving average line. For us with the education portfolio, and one of the things that we teach with our stock investing curriculum that we've created is breaking resistance, right? It did it here last year around the 120 mark. They also did it back in 2019, right around here, right? Breaking all-time highs. And then of course, the best one to have been the ideal entry was back in 2017 when they broke here. And you can see the uptick in volume as well. So will this be the next leg to the upside if they break the all-time high of 300? And that's what I think earnings will perhaps be the catalyst where institutional investors can come in, they'll accumulate shares, and then slowly take the stock higher again. So again, that's one scenario. I think that they did a good job on painting the picture and the momentum and the growth story behind PayPal and why the trend is still to the upside, right? You can see this trend over here. Okay. Any final thoughts or comments on this?
I think I'm personally very excited for earnings day to see how the market reacts and to see if PayPal meets my expectation and beats earnings.
Okay.
So I'm just watching it very, very closely and hoping that it reaches and in fact crosses my price target.
All right, good. Well, I think we'll end the session here. And for everyone else that is watching this, this is meant to be education. This is meant to give you more insight into the type of analysis and the type of training our students within Romero Mentoring are receiving to accelerate and speed up their understanding of financial analysis and valuation. There's the market bell. So I hope this was informative. I hope you found value in this. And with that being said, take care and I'll see you in the next one.